Hey, what's up guys? John here. Millions of Americans are now opting out of getting property insurance. They can't afford traditional homeowners insurance, flood insurance. They are looking for ways in which they can cut cost, and they're doing it any means necessary. That's what's happening right now in America. People cannot afford the record high cost of living, high insurance, high utility bills, high food costs, high gas prices, high car insurance. Everything is going up. Everything is going up, and people are looking for ways in which they can save money. But when we're looking at these disasters that are happening in California, in Hawaii, all over the place, in Florida, you had Fort Myers disaster, you had Fort Lauderdale flood. You have all of these problems that are happening right now, costing insurance companies billions and billions of dollars. And they're pushing these costs on to consumers. Now consumers, they don't have much room to move. And so what are they doing? They're just canceling. They're canceling their policies, which if a storm happens, a problem happens, these people would have to come out of pocket and pay for all of the cost themselves. Many people aren't going to be able to do it. I'm going to break it down for you. I think there's going to change and restructure coastal living in America to likes in which we've never seen before in U.S. history. Please hit the like button. When you hit the like button, YouTube will share this content to educate more people about what's really going on. And if you want to fix your credit, you want to position yourself for the greatest wealth transfer of all time, you need great credit. Go to greatcreditfast.com. If you have late payments, medical bills, charge-offs, foreclosures, repossessions, any problem on your credit report, you have any issue on your credit report, do not let it sit there. One late payment can drop your score upwards of 180 points. It's an astronomical amount of loss with just one late payment. So if you have any negatives, derogatories, get a hold of us. GreatCreditFast.com. Do not let this massive wealth transfer pass you by because of one or two or a few items on your credit report. GreatCreditFast.com. Book a call. Take a look at this. Americans are bailing on their insurance, right? Wall Street Journal today. That's absolutely crazy. Homeowners are increasingly forgoing home insurance, gambling that the likelihood of a disaster isn't high enough to justify a cost of policy. Well, the only way in which you could forego your homeowner's insurance is by owning your home with no mortgage. Free and clear. Because when you buy a property, the bank or the lender or the financial institution that's going to be giving you this loan, they're going to want to make sure that that loan, that asset they're lending on is protected. And so if you were to cancel your insurance while you have an active mortgage, that mortgage company will get notified, and that would be a big problem for you if you were to do something like that. The only people that have this leisure, this option, people that have no mortgage at all. So when we start to look at what's happening in places like Florida, for example, Florida rocked by home insurance crisis, I may have to sell and move. Owning a home has become so expensive that many people are canceling their insurance. The national average home insurance is for $250,000 in coverage is up another 20% to a record $1,428 a year. Like, that is crazy for $250,000 in coverage. That's not enough coverage to insure most homes. This is on top of an average monthly mortgage payment that costs $2,500 a month, record levels of debt, the most unaffordable housing market in history, and now uninsured homeowners. What could possibly go wrong? Well, look at where rates are today. Let's say, for example, you want to buy a $500,000 house, which that's like the median home price in Florida these days. And you're putting 6% down, 8% mortgage rate, 30-year fixed, $4,181. That is absolutely insane. There's no way that that is sustainable. There's no way. Now, a lot of people immediately say, well, John, a lot of people have 2%, 3%, 4% mortgages. They're not paying that amount. I agree. But these people are also locked in. They can't move. And as insurance continues to go up and the utilities continue to go up and the cost to maintain that property continue to rise, people that bought these properties, it's going to, their debt to income ratios are going to change with it, right? Everything is going to continue to change. And so if they lose their job or their wages get slightly reduced or compressed like we're seeing in many, many fields, you're going to start seeing a lot of people that simply are in really, really hot water. Mortgage rates, if you have perfect credit, 800 credit score, 7.6%. That same borrower 18, 19 months ago, we're looking about 3%, right? So it's crazy. Average credit score in America, 698, 8.224%. This is per Google. So I'm sure there's a loan officer somewhere in the country that might be able to get you, 7.8, 7.9%. But odds are you're about 8% for average credit in America. Like, that's crazy. So what's very interesting here is when you look at what's happening right now with Citizens. Citizens is a state-run insurance company. They have 1.35 million policies. They basically have a monopoly on the entire housing market in Florida. Right, 1.35 million policies. And what they are doing right now is they are forcing many of their clients to go to a different insurance company saying, look, if we're quoting you $5,000 a year for coverage, if another insurance company will do it for $6,000, you're going there. We're canceling your policy. So they say within 20%. So within 20% of whatever Citizens policy is, you're going to have to leave. That's what's happening. Thousands of Citizen policyholders may have to switch homeowners insurance coverage. So as this is also happening, you have this storm that possibly could come along the Gulf Coast next couple days in Florida, which could be another disaster, another problem, and another major expense for all Americans. It's not just going to be people in Florida. If you have insurance companies here that are suffering losses, they're going to continue pushing these losses up and down and throughout America, right? All throughout the coast, everywhere. But another very fascinating aspect of what's happening right now in the Florida real estate market and a lot of real estate markets is people are buying these deals, 3%, 4%, 5% cap rates, banking on 20, 30% increases in rents, like 20, 30% rent bumps every single year. Now rents are starting to soften. Cost to borrow money is going through the roof. Insurance and taxes are going up. And insurance right now for Florida, right, they're saying 33% rise year over year. 33% rise insurance costs. Average property insurance for Florida, $6,000 a year. Who can afford $500 a month just for insurance? It's just crazy. It's just crazy. But it reminds me of an article, Glenn Kelman, the CEO of Redfin, he came out twice, and I reported on both of them. 2.5 years ago, came out saying that one of the big problems in Florida is going to be insurance, and it's going to get much, much harder to get insurance. Well, he came out again, January 10th, 2023, about 8 months ago. He came out saying people buying Florida homes, right, homes in Florida per home coast will likely have trouble selling in the near future. And it's a very, very interesting concept that he brings forward. And what he says is that the insurers and lenders, the appraisers, everyone is stepping back from these coastal properties because they are vulnerable to superstorms. They are becoming increasingly common, Kelman said on January 6th podcast with Barron's, adding that many prospective buyers cannot afford housing costs that come with living in these risky areas. So what does this actually look like? Well, he says, according to Kelman, investors are stepping in because they are the only ones that have the cash and can withstand the risk posed by climate. This is what is going to happen. We are going to start to see investors come out of the woodworks buying these properties in cash. And if you're selling a property and you're looking for a cash buyer, that cash buyer is looking for a good price. He's not going to come pay market value, paying all cash. No, he's coming with cash. He wants favorable treatment, or she wants favorable treatment, either a very low price or just a great opportunity. They're not just going to pay all cash to get some market level median home in a normal area. And so when you have a market where everything is changing, insurance is going to continue to rise, and less buyers are going to be able to afford to enter the market, it's going to be downward pressure on these prices, no doubt about it. And that's why I think we're going to see a huge opportunity in Florida. I think we're going to see big opportunity in many parts of California. I think we're going to see more and more insurance companies go out of business and more consolidation happening in not just the banking industry, not just regional and commercial banks, but also across insurance companies and many of these actuaries. I think we're witnessing a major, major transformation of wealth and power that's happening throughout this housing market. I don't think a lot of people are ready for it. I think it's very wise to pay attention to all of these things that are happening. And they're happening, it seems like, every single week. One major disaster, one major event is happening after the next, and it's going to impact property owners. Now, many people would say, hey, these 2, 3, 4% homeowners are not going anywhere. Just wait. Insurance is going to continue to go up. It's not done. This party hasn't even gotten started yet for insurance. And as this all continues to change, people are going to be forced to either walk away, rent out their houses, sell it if they can't, withstand the pressure. But I don't think a lot of people can. And you look at markets like Florida, where people, 1031 investors, 1031 exchanged out of their LA properties, their New York City properties, and they basically, what a 1031 exchange is you have let's say an apartment building, and you sell that apartment building, and you roll the gain and roll the profit and roll the proceeds from that property to another property of like kind and defer the taxes into the future. But over the last couple of years in Florida, all this rent growth, all this demand forced prices through the roof. So people overpaid for these properties, and now rents are softening, and now costs are continuing to rise. And it's not just these large-scale 500-unit apartment buildings. You're talking about triplexes, fourplexes. You're looking at a variety of different deals. You had all these people moving in from all over the world, all over the country, to Florida, and now they're getting hit with all these curveballs. What do you think about it? Drop below. Hit the like button, add me on IG, And if you want to fix your credit, you want to position yourself for the greatest wealth transfer of all time, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. Don't let one problem and one situation get in the way of a bright future. Go to GreatCreditFast.com, book a free strategy session. Love to see how we can help you position you for this massive wealth transfer that we're in. And catch you guys next video.